Hello, and welcome back to the channel. I'm Algabot, your guide to the mechanics of automated trading systems for MetaTrader 5. In today's lesson, we're taking apart an expert advisor called the Accelerator Oscillator saucer signal. It's built around Bill Williams Accelerator Oscillator, and instead of a plain zero-line cross, it uses the classic saucer pattern to read whether momentum is speeding up or slowing down. By the end of this video, you'll understand how the saucer forms, how the strategy times its entries and exits, and how the code turns that idea into rules. Let's get into it. So what exactly does this expert advisor do? At its heart sits the Accelerator Oscillator, a tool designed by Bill Williams. To understand it, we start one step earlier with the Awesome Oscillator. The Awesome Oscillator measures momentum by comparing a fast average of the median price to a slow average of the median price, where the median is simply the high plus the low divided by 2. The accelerator then takes that momentum reading and subtracts its own recent average. In plain terms, the Awesome Oscillator tells you how fast price is moving, and the accelerator tells you whether that movement is speeding up or slowing down. Because it measures acceleration rather than speed, it tends to turn before momentum itself turns. This strategy does not simply wait for the accelerator to cross the zero line. Instead, it looks for the classic saucer pattern, a small curved sequence of bars that signals a fresh burst of acceleration. The rule is deliberately asymmetric. When acceleration is already on the side of the trade, the strategy asks for only 2 bars of confirmation. When acceleration is still working against the trade, it asks for 3 bars, a deeper saucer that filters out noise before committing early. Risk is handled with the average true range. The stop is placed to set multiple of the average true range beyond the signal bar's extreme, and the take profit is a fixed reward to risk multiple of that stop distance. The expert advisor holds only one position at a time for its magic number, and a spread filter blocks entries when the spread is too wide, keeping the simulated fills realistic. Who is this style of approach suited for in an educational sense? It's oriented toward traders curious about momentum and acceleration on the faster majors like the euro against the dollar or the pound against the dollar, and on indices, typically on the 15-minute through 1-hour time frames. Remember, this is a study of how the logic works, not a recommendation. Trading carries real risk, and losses are a normal part of any strategy. Let's walk through the exact logic the expert advisor follows, step by step. The strategy acts once per freshly closed bar. On each new bar, it first checks that it has enough history to compute everything, that it has no open position for its magic number, and that the current spread is within the allowed maximum. Only then does it evaluate signals. It calculates the accelerator oscillator for the 4 most recent closed bars, which the code labels AC0 through AC3. AC0 is the latest closed bar, and AC1, 2, and 3 step further back in time. Every signal is a comparison of these values. Consider the long side. The first path is the above zero saucer. Here the accelerator is already above zero, and the last 3 readings are rising, meaning AC0 is greater than AC1, which is greater than AC2. That is 2 rising bars of acceleration in the direction of the trend, so only 2 are required. The second path is the below zero saucer. Here the accelerator is still below zero, but it has turned upward across 3 rising bars, so AC0 is greater than AC1, greater than AC2, greater than AC3. That extra bar is the whipsaw filter for catching an early turn before the zero line is reclaimed. The short side mirrors this exactly. If the accelerator is below zero and falling across 2 bars, that is the with trend short saucer. If it is still above zero but falling across 3 bars, that is the early turn short saucer. When a long signal fires, the entry is taken at the ask price. The stop loss is placed below the signal bar's low, at a distance of the average true range multiplied by the stop factor, which defaults to 1.2. The take profit sits above the entry at the reward to risk multiple, defaulting to 1.6 times the measured risk. For a short, the logic flips. Entry at the bid, stop above the signal bar's high, and the target the same reward to risk multiple below. After that, the stop loss and take profit manage the trade to completion. There is no separate exit rule and no averaging in. One clean position, one stop, one target. This structure keeps every trade's risk defined before it is ever placed, which is the disciplined idea at the core of the design. Let's read the actual MetaTrader code on screen, just as you'd see it in MetaEditor. At the top are the input parameters. FastAo and SlowAo, defaulting to 5 and 34, set the two averages inside the Awesome Oscillator. AC signal, defaulting to 5, is the averaging period for the accelerator itself. ATR period and AtrStop define how far the stop sits from the signal bar, and RewardRisk sets the target as a multiple of that distance. Max spread points blocks widespread fills, lots fixes the trade size, and magic tags the position so only one is held at a time. Below that are the two signal blocks. On the long side, the code sets long above to true when AC0 is above 0 and rising across 2 bars, and long below to true when AC0 is below 0 but rising across 3 bars. If either is true, it reads the ask price as the entry, places the stop a stop multiple of 8ER below the just closed bar's low, and sends an order of type buy. The take profit is the entry plus the reward risk multiple times the risk. The short side is the mirror image. Short below is true when the accelerator is below 0 and falling across 2 bars, and short above is true when it's above 0 but falling across 3. If either is set, the entry is the bid price. The stop goes a stop multiple of ATR above the bar's high, and it sends an order of type sell, with the take profit the same reward risk multiple below the entry. Notice how both sides are perfectly symmetric, and how the stop and target are computed before the order is ever sent. Now let's bring the whole idea to life on a chart. Along the bottom you can see the accelerator oscillator plotted as a subpanel, swinging above and below its 0 line. The green area marks readings above 0, the red area below, and that 0 line is the reference the strategy leans on. Watch how the subpanel leads the candles above it. Follow the price on the left. It's drifting lower across the first few candles, each close a little beneath the last, and down in the subpanel the accelerator has pushed well into negative territory. This is a market losing upward energy, and at this point there is no signal. The strategy is simply watching and measuring. Now look at what happens next. Price stops falling and begins to base, and the accelerator reaches its deepest point below 0 and starts curling upward. This is the beginning of a saucer. 1 bar rises, then a second, then a third, each accelerator reading higher than the one before it, yet still below the 0 line. That is the 3 bar below 0 saucer, the early turn condition. Because acceleration is still negative but clearly turning up, the strategy waits for the extra confirming bar to filter out noise, and on the close of that third rising bar the long condition is satisfied. The buy entry marker prints, and the entry is taken at the ask on the next bar. Immediately the strategy defines its risk. The stop is placed below the signal bar's low, a set multiple of the average true range beneath it, so the distance adapts to how volatile the market is right now. The take profit is set above at the reward to risk multiple of that stop distance, defaulting to 1.6, meaning the target sits 1.6 times as far away as the risk. From there, watch the follow-through. The next candle pushes up and closes strong, and the accelerator crosses above 0 as momentum accelerates in the trade's favor. The move extends over the following bars, each one carving a higher high, until price reaches the take-profit target and the long trade closes for a gain in this illustration. Notice the entry came while the accelerator was still below 0. That is the whole point of the saucer, reading acceleration early, before a simple 0-line cross would have given the go-ahead. Now the second trade. After that push higher, price stalls near the top and begins to roll over. Up in the subpanel the accelerator has climbed to a peak above 0, and now it starts to slip. 1 bar lower, then a second, then a third, each reading beneath the one before, but still above the 0 line. That is the 3 bar above 0 saucer on the short side, the early turn condition for a downward move. On the close of that third falling bar, the short condition is met. The sell entry marker prints, and the entry is taken at the bid. Just as before, risk is defined immediately. The stop is placed above the signal bar's high by the same average true range multiple, and the take profit sits below the entry at the reward to risk multiple of that distance. Then price follows the acceleration lower. Each of the next candles closes beneath the last. The accelerator falls through its 0 line into the red, and the market slides down until it reaches the short take-profit target, closing that trade in the illustration as well. Step back and see the rhythm. In both cases, the accelerator turned first, the saucer counted its bars, the entry printed, and the stop and target were fixed before price moved. With the trend, 2 bars are enough. Against it, 3 are required. That asymmetry, more confirmation when acting early and less when acting with momentum, is the heart of this design. And of course, not every saucer leads to a winning trade. Losses happen, and that is why every entry here carries a predefined stop. Let's wrap up what we covered today. We looked at the Accelerator Oscillator saucer signal, an expert advisor that reads Bill Williams Accelerator Oscillator through its authentic saucer pattern. We saw how the Awesome Oscillator measures momentum, how the accelerator measures whether that momentum is speeding up or slowing down, and how the asymmetric 2-bar and 3-bar rules time the entries. We walked through the stop and target logic built on the average true range, and we read the MetaTrader code line by line. Remember, everything here is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading carries real risk, and losses are part of it. If you found this breakdown helpful, please like the video, leave a comment, and subscribe for more MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.